Hi everyone, welcome to today's video. So approximately 2 months back, Adani Enterprise, which is the parent group company of Adani Group of Stocks, it was trading at roughly 4,200 rupees. Now, over the last 7-8 trading days, the Adani Group of companies has crashed by 50-60%. So Adani Enterprise stock is now trading at 1,500-1,600 rupees. Professor Aswath Damodaran has come out with a specific video and a very dense blog on this entire topic. And according to his valuation model, and I'll explain this valuation model to you, he is predicting the correct stock price would be somewhere around 950 rupees. So from its top, it's approximately an 80% correction, which is a fairly massive fall. So on this particular video, I'm going to help you understand what is the correct valuation of Adani Group of companies. I will use Professor Damodaran's study that he has done. I will also link the data sets, the video that he has done on this topic. You can go and watch it. His video, his explanation is very, very dense. So I am going to simplify it for you. Now, who is Professor Damodaran? He is one of the leading names when it comes to doing company valuations. He did a very good valuation exercise on Zomato when entire India was being euphoric on Zomato's IPO and people were bidding for Zomato IPO at crazy amount of prices. He predicted that Zomato is going to fall and he was correct about it. He is saying something similar in a very diplomatic way about Adani Group of stocks. So I'm going to help you understand and decode this entire commentary. Now you might have a natural FOMO oriented response that okay, with the Adani Group of fall, Indian markets will also fall, this, that. No. So I've done a specific video. Please go and watch it. I'm quite bullish about the Indian market. I'm investing more money into it. I'm also investing quite aggressively in the US markets right now. Why? Take a look at Tesla. It has gone up by almost 80% in the last 1 month. Take a look at Coinbase. It has gone up by approximately 120%. Take a look at overall NASDAQ, which is the index in the US. It has gone up substantially. And I'd been investing for the last 2 months in the US market. You can check some of my posts from YouTube member community. Tomorrow also, I'm going to make a post on my analysis on certain stocks, what I'm bullish, bearish about. So you could consider joining it in case you are a serious investor. Meanwhile, many people ask me, how do I buy like US stocks? I feel quite bullish about it. So for that, I use an app called as Vested. It's a wonderful app. It makes your investing in the US sensible, very easy, smooth. So you could consider using it. I'm outlining all the steps that you need to consider before investing in Vested and why or why not you should be building position in the US stock. So please check out my pinned comment on this specific topic. So let's kickstart our video and I'm simply going to explain you 3 critical reasons as to why Adani stocks can fall more. So the first key reason, interestingly, comes from LIC's commentary. So before I jump into LIC's commentary and what specific points they have mentioned, let me quickly touch upon the shareholding pattern of Adani Group of companies. And you can see it here that majority of it is still owned by the Adanis, who are the promoter of the company. So they have hardly decreased their holding over the last 10 years. Now, in terms of FIIs, DIIs, they have very little position. It is alleged that FIIs are shell companies that have been created by Adani people themselves. They are cornering the stock, low float, this, that. A specific video has already been done on this topic. You could watch it. So to cut the long story short, the point that I'm trying to drive home is that the big players haven't sold Adani yet. And despite that, the stock has fallen. Maybe some big players have sold it. We don't know who exactly, but LIC hasn't sold it. Indian banks haven't sold Adani stocks. So at least the parties that we know of whom we can trace Adani holdings to, they haven't sold Adani stocks. And this can actually change. Why is that the case? For that, let me show you LIC's commentary first, and then let me break down the numbers for you. So here is LIC's statement, and LIC says that their total holding in equity and debt format in Adani Group of companies is 36,000 crore, approximately 36,000 crore. This includes debt and equity means stock. If we consider the purchase value of equities or stocks, it comes out to be roughly 30,000 crore. And they have purchased these stocks not in one go, but over several years. And as per the data on January 27th, the market value of this entire purchase was roughly 56,000 crore. So they have almost doubled their money in Adani stocks as of January 27th. Now you'll feel very happy that LIC doubled the money. Okay, please wait a minute. In the last 7 to 8 days itself, Adani Group of companies have corrected by 50-60%. So if you apply this math, the value of this investment comes out to be roughly 28,000 crore. So despite purchasing Adani Group of companies for the last several years, the total purchase price was 30,000 crores and they are looking at a loss of 2,000 crore. Now you'll say that, okay, this is just like a small tiny drop in LIC's ocean. LIC is such a big player, this, that. See, I'm not debating the quantum. You need to understand the mandate of a company like LIC. There are different types of investors. If I'm going and giving my money to a hedge fund manager, what is the objective with which I'm giving my money to a hedge fund manager? The objective is growth of money. I am okay taking more risk. Therefore, I chose a hedge fund to invest my money into. That is the objective of the hedge fund, that go and explore growth options. When an investor is giving money to life insurers like LIC, their objective is not massive growth. They are looking for low risk options. So it is surprising why a company like LIC will explore this massive growth mandate by experimenting with these highly volatile stocks. Now comes the related point where I started the story. See, so far LIC has not sold any of the Adani stocks. Indian banks have not sold any of the Adani stocks. But think about it this way, that currently the investors in LIC, they are looking at their investment value going down. It has gone down from 30,000 crores to 28,000 crore. Now, in case the Adani group of companies keep on falling, if they fall by another 10-20%, what do you think the investors are going to say to LIC? There will be a lot of hue and cry, because now this value will again fall by roughly 20%. It will become 23,000 crore. But guess what is going to happen at that stage? At that stage, if one big party decides to sell, for example, banks who are holding a lot of pledged stocks from Adani, even one bank sells, what do you think the correct value of this collateral will be? It will not be 28,000 crore. Why? Because even if LIC decides to liquidate means sell their entire stake of 28,000 crore, they will not get more than 15,000 crore. I'm just making up this number, but they will get a very less amount. Why is that the case? Because the holding of LIC in absolute quantum term is very, very high. If they say we are going to sell our entire stake on Adani stocks tomorrow, we have 28,000 worth of Adani stocks, they can't liquidate that. There will not be a counter buyer who will buy it from them. So they will have to do a distressed sale on this. So the summary point here is that even if one big known investor in Adani group of companies, be it a bank which is holding, pledged promoter holding of Adani stocks, it decides to sell, the value of this collateral in de facto or real terms falls quite aggressively. It is going to be a massive loss. And then you will see the ripple effects of a lot of established shareholders selling Adani stocks. So the likelihood of this situation playing out is going deeper by the day. And this is the first reason why I feel that Adani stocks can fall quite aggressively from this point. Now, the second key reason why Adani group of companies can correct by 30-40 more % has to do with the fundamentals of the stock, and Professor Damodaran has explained it really well. So I will simplify it. I'll pick some of his data points and commentary, and I will add my own flavor to it. So on this, the first key point is that the valuation of Adani group of companies, despite all the fall, is still very, very high. So for this, you can compare Adani Enterprise with other set of companies and look at their PE ratio. And what you will notice is that Adani Enterprise's PE ratio is much, much higher compared to any of its peer group. Now, in relation to it, Professor Damodaran has given two data points to us. The first data point that he speaks about is that Adani group of companies has been a recent entrant in the top 10 category and has come into that space in the last 10 years only. For example, in the last 5 to 6 years, 4 Adani group companies have become India's top 20 companies. This is a massive rise in valuation that has happened. Why it has happened? Again, I had done a separate video on that. It is said and alleged that this has happened by maintaining low float. Now, what is the meaning of low float? Please watch this video. You will understand it. So what he's simply saying here is like this, that Adani group of companies started here. They scaled quite aggressively and now they have come down. Yes, almost a 60% correction has already happened, but that does not mean that this level is still fair level. So that is the simple message that he's giving. Now, a lot of counter arguments are given that, you know what, even the PE of Facebook, Tesla, Amazon is very, very high. Why are you not talking about it? Why are you talking about Adani group of companies only, that their PE is high? Okay, so to cut the long story short, this is what Professor Damodaran says, that see, the surprise though is that the dramatic boost in market cap happened at a family group built around infrastructure businesses where investors have to wait for decades to pay off. Please understand that when people invest in a tech company, the market cycle is shorter in terms of getting money. For example, if Apple launches a blockbuster product next year, a lot of money will be made by Apple. But such type of situation does not usually play out when it comes to infrastructure driven companies. So the summary is that yes, Adani group of companies have fallen by 50-60%, but under no circumstances we can consider it as a deeply discounted stock. Now, second key related point is that Adani group of companies are a high capex. High capex means that these are high capital expenditure, that it's an infrastructure domain. So to grow the business, you need like crazy amount of money. So it's a high capital expenditure business. And interestingly, it's its margins are not improving. In fact, it is falling. So this is the data point that you can see that Professor Damodaran has split the data points in 3 different categories between the performance 2002 to 2015, 2016 to 2021, and from 2021 up until now. And what you will see is that in terms of operating margin for the company, it has been falling. Now consider it this way, that back in 2015, hypothetically speaking, that let's say Adani Group had 1, 2, 3, 4, 5, 6, right? So it had 6 airports, right? Now by 2022, it has already expanded quite aggressively. So let's say that it has like now 60 airports, right? So theoretically speaking, because of economies of scale, that you have more infrastructure to manage, your operating profit margin should improve. But this is not improving, this is falling down. One counter argument here can be that, okay, fine, they have built 60, but maybe in the future they will build 600 airports and then they will be able to improve their operating margin. So we will factor that into it, and at the last I will tell you and explain that model that Professor Damodaran has incorporated, and it contains this specific point. But for the time being, I hope you got the point that the operating profit margin of Adani Group of companies is going down despite massive expansion, and this is not a healthy fundamental sign. And again, I will take the snippet of Professor Damodaran's commentary and you can read his verdict on the same. Now the third related point that Professor Damodaran has spoken about in the form of fundamental analysis is that this company has been built on debt. Now this is nothing new. I am not saying any new information here. This is publicly available. But the interesting part is the reason why this has been built on debt. This was something that I was able to uncover by reading the entire note that Professor Damodaran has put. And his hypothesis there is that, see, Adani Group is a family-owned enterprise. They want more control and therefore they are funding their entire operation in the form of net debt. So you can see that almost their entire operation or expansion has been fueled by debt, not by selling equity. Selling equity means that you take a portion of your company out, you give it to someone else. For example, let's say Adani ji owns 100 stocks. Now he is selling 20 of those stocks and giving it to other people. Yes, he will get some money, but he will have lesser control over his company, right? So that is a control that the Adani Group of enterprise does not want to lose, and therefore they have done a lot of debt financing. But now the problem is that if you consider why the FPO was launched, this was an equity sale, right? So maybe now the Adani Group is being pushed by its investor that, you know what, we have to bring down the debt. It is causing a lot of problems for us. So there might be a lot of internal push to sell more equity. But now what is the problem? The problem is that the stocks have corrected by 50-60%. So if something that could have been sold at 100 rupees by cutting stocks of Adani's can now only be sold at 40 to 50 rupees. So if they go for raising money by selling equity, they are going to get half the value what they were getting approximately 2 weeks back. So this makes the company fundamentally weaker because on one hand, they have just taken too much debt. They can't take too much aggressive debt from this point. And second, the value of their equity has been crushed in half over the last 10 days. Now, not only this, the troublesome fundamental point here is something called as the interest coverage ratio. Now, what is the meaning of interest coverage? So in very simple terms, it is like this. So let's say that I'm taking a loan of 1 crore rupee and this is the 10-year loan that I've taken from a bank, and every month I pay an EMI of 1 lakh rupee. Now, as long as my business for which I have taken a loan, it makes, let's say 1.5 lakh rupees, it's cool. I will be able to repay that debt fairly easy. I will have some growth capital left that I'll pay 1 lakh rupee for covering my interest. So that becomes my interest coverage ratio 1.5 over 1 lakh. So my interest coverage ratio is 1.5. Now good companies usually have an interest coverage ratio of 6 to 7 times. So there are a bunch of expenses and future planning that is done for such large companies. But if you compare the interest coverage ratio of, let's say, Adani Green or Adani Transmission with any of its peer group, right? Even compare NTPC, which is a government company, it has more interest coverage ratio compared to similar Adani stocks. So this is again a fairly big problem because whatever money they are making, most of it is just simply going in terms of the interest that they will be paying on the debt that they have already taken. So this is a fundamental problem that the group is currently facing, and it does not portray a healthy picture about the company. So now comes the final few points that can help you understand the fundamentals of the company. And one central point here has to do with cost of capital. So cost of capital means that let's say that I am taking a loan of 1 crore, then how much rate of interest am I paying on it? That becomes the cost of my capital that I have taken. Capital is 1 crore. crore. So let's say that I'm taking 10%. Now, as long as my business is generating 12%, that is cool, right? Because I'm paying 10% in terms of this capital, but I'm making 12% return on it. So it's a healthy sign. Now, with time, as my business expands, let's say that I take 10 more crore of capital, right? And my cost of capital is 10%. Now, if I'm able to increase it to 14%, my return, that is a healthier sign, because as I'm growing, I'm increasing my return on capital compared to the cost of capital that I'm taking. Is something similar happening with Adani Group, or is the story opposite? Here you will clearly see that between the time period 2002 to 2015, the return was approximately 15%. Then it fell to 4.45. Now it has fallen to 3.18. So it simply says that as Adani Group is expanding, probably it is not using the capital effectively. Now, of course, there is a counter argument, and I'm putting it here. And this has been elaborated by Professor Damodaran, that it is true that in infrastructure business, return on capital improve as assets age, partly driven by their higher operating income and partly by declining invested capital. But as with margins, the reality check is that these businesses will struggle to earn their cost of capital. Okay, so simplified explanation here would be that so far it looks like that the cost of capital for Adani Group is going to be much higher compared to its return on capital, and this situation is not changing as of now. But this is a core characteristic of an infrastructure driven company like the Adani Group. There is nothing wrong fundamentally with the matrix going off, as long as they are growing sensibly. So if you think that right now, let's say hypothetically, Adani Group has 10 airports, it can easily expand to 150 and its return on capital is going to improve with time, it might be a sensible move to purchase Adani stocks. If you don't think that that is going to play out, then please stay away from it. Now, the final and the third reason why I feel that Adani Group of stocks can likely fall from this stage is because of their media management and PR related issues. So far, the current government has maintained a distance from the Adani Group due to political climate. So that is a troublesome sign. Now you'll say, okay, why are you saying it? Can you show some data? So take a look at this particular article and I will read it with you, that Finance Ministry and Niti Aayog had put in certain objections which were overruled before Adani Group won bids for 6 out of 6 airports. So call it whatever you like, but this issue came up in the year 2019. And if you read the entire article, what objections were raised? So this was raised by the Department of Economic Affairs, Ministry of Finance, and they have explained the rationale that 6 airport projects are highly capital intensive. Hence, it is suggested to incorporate the clause that not more than 2 airports will be awarded to the same bidder, duly factoring in the high financial risk and performance issues. So they wanted to segregate the risk, but this was not done. And another point was raised about GMR, which was originally the only qualified bidder, but it did not get even one contract. So you can figure it out that to what extent limelight was given to these type of issues back in 2019. Not much. And now in 2023, environment is very different. Now this is the same point that has been raised by Professor Damodaran also, that there are plenty of Indians who have been saying and thinking what is made explicit in the Hindenburg report. And the question that we should be asking is why they have not been given bigger platform to air out their views. So I will leave it to your imagination and you can draw out your own conclusions. But to cut the long story short, it is not as if that if new kind of data is found, it will not be aired, because people are hitting the Adani Group. So people are going to figure out ways to bring out such issues more clearly now, and people will hear them. So then comes the final point that, okay, what is the pricing model look like? To what extent can it fall? Do I believe in that narrative that Adani Enterprise stock will fall to 950 rupees? What is my take? So let's look at the data, and here is the entire spreadsheet that has been posted by Professor Damodaran. Couple of very, very important points, that this analysis was done without accounting for Hindenburg report. So if you account the entire hit factor that has happened due to Hindenburg report, this 950 number looks aggressive, so to say. So anyways, let me quickly take you through some data and hopefully you will be able to better interpret it now. So the assumptions are that the revenues are going to grow at this rate by almost 30%, and then it will stagnate because most of the infrastructure will build. So it will start growing at 4.59% CAGR. Even the operating margin will improve to 7%. So this is again a best case scenario type of analysis that has been given, that if you can increase your operating margin by almost 60%, that's a fairly high number from what it currently stands. Tax structure won't change, and even your ROC or marginal ROIC will improve to 23%. So all these optimistic assumptions have been done, an entire present value of future cash flow analysis has been done, and then we get the number of 950. Interesting bit is that even at this price, Professor Damodaran has said that, you know what, if I get to buy this stock at 950 rupees, will I buy it? His answer is no, I will not buy it at even 950 rupees. Why? That is an important point to understand. So his viewpoint is that, see, I don't see a point in terms of investing in a family-oriented business. Adani Group is a family-controlled business, so to say. Almost 70-75% of holding is with the family group, so to say. The bad thing that happens in that scenario is that, see, you might invest in Adani Wilmar. You are giving your money to Adani Wilmar. You are bullish about that stock. Now with internal creative financing, that money can be put to, let's say, Adani Transmission or Adani Green. You might not be bullish about Adani Transmission, Adani Power, Adani Green, but by investing in Adani Wilmar, somehow your money reaches to those companies. So this becomes a problem when it comes to family-owned businesses that are tightly controlled with a lot of group companies. Money can move from one company to the next, and we will never be able to see the game at the back end. I hope you enjoyed this discussion. If you did, do press the like button. It will help these type of videos reach out to more people, and I will see you soon.